Probably noticed an active day on Wall Street as stocks declined, then rebounded ahead of a busy week. Lena Mills, the chief investment officer at Legacy Trust, is encouraging investors to stay focused on the long term as we move through this period of uncertainty.
So it's great to see you again. Thanks for being here.
Thank you for having me.
Busy day on Wall Street. What caused this today?
There's a number of factors at play. You know, we came off a very strong stock market year last year, and now we're into a new tax year. And, investors are looking ahead and wondering what the market is going to bring to them this year. And with the Fed meeting this week, I think there's some concerns as to what interest rate hikes are going to do to the stock market. And that certainly seems to have been a big driver of the volatility here in the last couple of weeks.
Do you think this volatility then will sort of change the mind of the Fed?
I don't think so. I think the Fed's been very clear about what they see coming. At this point, they've been pretty transparent that they anticipate beginning interest rate hikes starting in March, and we are probably going to be due for a couple more further on throughout the year as well. And the market has really more or less priced that in. In fact, the market now is anticipating something like 4 interest rate hikes over the course of this year. So I think that's likely to continue. The Fed is looking at consumer prices being elevated and wanting to make sure that they don't let fears run away with consumers, and so they're really trying to, I think, put a halt to that by beginning to raise interest rates.
I know when we talked last time, you said this could actually be a good opportunity for investors.
Yes, and I think we saw a little bit of that here at the close of the trading session. This was a day of a lot of wild swings, and at one point the S&P 500 was off more than 10% from its market peak, even just earlier here in January, which puts it officially into what we call a market correction. But it didn't stay there. We saw some buyers come in, and we saw investors really maybe look at that as a buying opportunity. And we saw the market actually right at the end of the trading session close positive. So hopefully that gives people a little bit of reassurance. There's still a lot of very attractive stocks out there today that you can buy at a discount right now. And I think that's a pretty good opportunity when you consider the fact that the U.S. economy still looks poised to have a pretty strong year for growth.
Do you expect the same for tomorrow? And I know the Fed meets on Wednesday, but do you expect maybe another busy day tomorrow?
I think it's likely that we are going to have a choppy year, especially as we are anticipating. Right now we're kind of in this period of uncertainty until we get the official statement from the Fed, which won't happen until Wednesday. I think we're probably going to be dealing with some choppiness. But I would encourage investors to really try as best as possible to keep their eyes on the longer term. The fact that, again, I do think this is going to be a positive year for economic growth. We do appear to be moving further and further, at least economically, further past the pandemic, with the unemployment rate really starting to come down pretty low. So that should keep the Fed on track and should keep the stock market still moving into positive territory, I would hope.
All right. Always good to have a little bit of reassurance anyway. Thanks again. Really appreciate it.
Thank you very much.